The markets are once again on the verge of breaking out, and we think that this is going to be the next leg up. My name is Hamilton. I'm here with the Trading Initiative. Give me 5 minutes to tell you why we are now entering the best time of the year. Newsletter just went out. If you're not on the newsletter list, there's a link in the description below. It's completely free. I try to send out a couple of newsletters a week. They're very well articulated with charts. They will help you make money. Let's look at the one that I just sent out right now. We are entering the best time of the year. Read that again. We are entering the best time of the year. If you expect that the election and geopolitical events and everything else are going to crash the market, you are going against what historical trends are telling us. And I don't know about you, but I'm going to follow the stats every single time over somebody's intuition or gut feeling. It's made me a very wealthy individual. It could make you a very rich man or woman as well. So let's go through this. We've been talking about how this year in particular was a very important year from a historical standpoint, going back to January. Why? Well, there were multiple reasons why we expected this year to be very, very bullish, but it really boils down to three in particular. One, it's the fourth year of an election cycle, which we knew right off of the bat was going to be the most bullish of all 4 years. Number two, we are within a secular bull market. What does that mean? Market forces are primarily bullish on a longer term time frame. I'm talking decades, not days or weeks, but decades. It's part of the reason why the 2020 crash was bought up so aggressively. The global financial system is built to buy right now. Eventually, it will not be. Get while the getting's good. And then number three, the markets are breaking out to all-time highs. That is very rarely bearish. As a matter of fact, we wrote about it way back in January, and I'm going to show you the post. So this is for paid members only, but I just recently made it free. It went out in the newsletter. I want people to read why we thought this year was going to be bullish, exactly how we positioned ourselves going into this year, and why this year is our best year as a community. You can see it was posted January 24th. We were up about 2.5% in January. There's this old adage that goes, the way January goes is eventually how the year goes. What does that mean? 83.6% of the time, going back to 1972, if the S&P 500, closes higher in January, it closes higher on the exact year. I'm going to say that again. When January closes green, there is an 83.6% chance that the S&P 500 is also going to close green. That is not my opinion. That is not my bias. That is stats going back to the 70s. And that's enough data to have a quantifiable edge, guys. Once again, we have three major themes working for the bull side. We identified this back in January. It's guided us all year to our best year. Secular bull market, 4-year presidential election cycle, positive January. And then once again, as you can see up at the top here, we were breaking out to all-time highs back in January. And I don't know about you, but there's no better time to be long anything than at all-time highs, especially as it's breaking out, because trends tend to take these things a hell of a lot longer than most people expect. You see our original price target up there at 555. We thought we'd get there by December. We got there in July. This has been a very, very bullish market. And just to show you guys that I'm not impervious to being called an asshole or a dumbass, we're dumb. We follow what price is telling us, not what the scary guys on FinTwit or the media tell us. Once again, we follow price. We don't follow opinion. If that upsets you, I don't know what to tell you. It's made us very, very rich this year. So once again, I want to tell you why this right now, what you're getting into is the most bullish time of the year to own stocks. First things first, this has been a very good year, right? Indexes are up 23.42% for the S&P 500. The Qs are up 21.62%. We have the Dow Jones Industrial up 12.49% and small caps up 11.79%. It has been a very good year to be a bull. Once again, we've been bullish all year. There's really not been a single time this year that we have taken those longs off the book. We've played defensively through summer because of that summer volatility, that August 5th drawdown, but we actually were net buyers a week later once we realized the August 5th breakdown was not going to be retested. We bought stocks aggressively, and those are some of our biggest positions to date right now. We thought the market was going to rip higher. We continue to think the market is going to rip higher. This is your stats going over every single 6-month period in the market, okay? Take all 12 months, look at the various types of combinations over 6 months. The November to April 6-month span is the most bullish time of the year in the S&P 500. And by the way, this is going back to 1950, even more data, guys. We have, 74 years worth of data here that we're looking at. That is a substantial amount of data. This is a quantifiable edge. November through April, the average change on the S&P 500 is 7.1%, guys. 7.1%, and we have a 77% chance of it being higher in general. Don't need to tell you guys, if you know anything about basic arithmetic or you've passed 5th grade math, you should know that a 77% chance is an overwhelmingly high chance that something is going to play out. And if you're a betting man, which we all are, that's all we're doing. We're professional risk managers. This is probably something you should keep in the back of your mind if you're looking to short a market or sell some great stocks because you're afraid of the boogeyman telling you that the world's going to end. The data does not support that. So this is a beautiful chart by Ryan Dietrich. You can follow him on Twitter. He's part of Carson Research Group. Fantastic. So we know going back to 1950, the November through April corridor is historically the most bullish. But what I want to actually focus on is not the most strong time, right? Obviously, that's where we're focused right now because that's where our positions are. But what I want to focus on actually is what were the seasonally weak periods like this year? The May through October 6-month window is notoriously the weakest 6 months out of the year. You have the summer volatility baked in, that like middle of October weakness, the sell in May and go away adage that everybody hears. You sell in May, you go off on your summer vacation, you come back in September or October, you start to buy stocks again, and all of a sudden the market keeps rolling. Yes, that does have some weight to it. Going back to 1950, once again, the average change 1.7%. So yes, there is some, but what I want to focus on is how did the market perform this year, understanding that that is the weakest part of the year, the May through October window. It performed incredibly well from May 1st until today. So the May to October corridor, we have double-digit moves on the Qs and the S&P 500. Once again, double-digit moves in the Qs and the S&P 500. Guys, selling in May and going away was legitimately the worst advice you could have taken. Absolutely. The markets have absolutely ripped through the seasonally weak period. So what am I extrapolating from that? Well, if the markets were very strong during a period of time where the markets are typically very weak, what can you reasonably expect during a time in the market where they're very strong on average? I think they continue to outperform. I think that these stats show the market doesn't care about this election coming up, regardless of whether you want Trump or Kamala Harris to win. The market doesn't seem to care whatsoever. It looks like it wants to continue to go higher. We have the stats going back to 1950 that support it, right? We have the stats going back to the 70s to support it back in January. This stuff is playing out almost to a T. And once again, the seasonally weak period held up very, very well. The last part I want to point out here is that the indexes are sitting at all-time highs. The S&P 500 just was trading at all-time highs last week, and the Qs are consolidating underneath those July highs for the last 4 months now. Are you reasonably expecting that this does not break out into all-time highs? Can you look at me with a straight face and say, I don't think the Mag 7 stocks, which are reporting over the next 2 to 4 weeks, are going to send this market higher? I think you're crazy. With all of the available information that we have, with the way the market's been moving this year and last year, I don't think there's anything that's going to slow down this market. As a matter of fact, I don't think enough people are long. I purposefully did not include it in the free newsletter here, but the paid members of TTI are about to look at the NAAIM data, which is a survey of money managers, professional money managers, how long they are, how bullish they are the market. They are not as bullish as they were back in July or March. It shows you that there will be buyers at higher prices. If this market breaks out to all-time highs, those professional money managers are going to have to buy higher to fulfill client obligations. And also the AAII bull bear spread telling you the bullish, bearish, and neutral ratings of survey respondents. We have the least amount of bulls going back to May, and yet the markets are at all-time highs. Guys, if there is a rip here, I believe not only are more, money managers, professional money managers going to be caught offside and forced to buy higher, but retail as well. We have a growing number of shorts that are entering the market. We're coming into this kind of disbelief portion of this uptrend, and I think we continue to rip higher. Once again, this newsletter just went out. If you like this stuff, it's completely free. Link is in the description below. And if you want to join our market research side that goes through all of the trades that we took over the last 8 weeks to make a bunch of money this year, which we have. We've had a very, very, very good year this year. The link is in the description below as well. Gives you a rundown of all the different services that we utilize and what you will get. You can see really quick, the profits section of our Discord has been absolutely slammed over the last few weeks with huge wins because we're not afraid to buy stocks in a market environment that is screaming buy stocks, even if the scary guys on TV are telling you not to do them. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Tell me if I'm an idiot. That's okay. This has been the best year I've ever had, and I hope to finish it strong. I'll catch you in the next video.